All right, Yield Nerds, episode 153, a very interesting one. I will be taking 10 chill pills as part of my stock strategy. I'll explain what that means. We got a big week ahead, interest rates, possible tariffs coming up in the next 2 weeks. So I will tell you all about my chill pill strategy very, very shortly. We're up to 451 subscribers. What an incredible honor. There are three playlists. The Income Investing Roadmap organizes this entire show chronologically. Please start there if you're new. There are two other playlists, one on preferred stocks and one on the game that I call Yield Super Bowl. It is a pre-tax yield comparison across durations. Check it out. And last but not the least, I do not have any magical powers. I make mistakes. I will share one of them today as well. And so everything I share is my knowledge, and I am trusting that you will do your own due diligence. Okay, we'll start in our usual four parts. I'll check on the market temperature. I'll show you how my portfolio is doing, and I'm taking chill pills with bags of money. And there are a couple of key events coming up in the next 2 weeks, and I'll share my investment thesis based on my analysis of those events. And lastly, share my holdings. Well, first things first, I still am leading the NASDAQ by a big margin, and I'm very, very excited about it. And I hope to keep that run. And that has been true whether you look at the last 3 months, year to date, my lead continues. My whole portfolio, for those of you who are new, kind of looks like a nice and easy inclined line because most of it is in fixed income. It doesn't have these huge variations, and 6.25% tax-free for the most part. Hey, I'll take it, and I'm happy about it. Um, well, as I told you, I did make a mistake, and I want to share what is happening. I keep talking about bear steepening, but at the same time, I do have 10% of my portfolio on the 10 years and beyond, a lot of agency bonds on the 30-year side. Those are all crashing. So bear steepening is a real thing. It is happening. And so some of my long-term allocations are having problems, but I do not intend to sell them. And so even though that is depressing my total portfolio value by a smidgen, I'm not reacting at all to it because I'm just going to hold them to maturity and see what happens. But other than that, I do want to let you know that bear steepening is a real thing. It is happening, so watch out. Well, what is going to happen in the next 2 weeks? Here is what I think. Speaking of thinking, I want to make sure you know I'm not a wealth management advisor. This is not investment advice, and I don't do politics or products. So I'm sharing my opinions. If you disagree with me, please share your thoughts. I learn from you. Well, next week is a big week. Jackson Hole, Chairman Powell, gets to talk about how the yield curve management is going. As you may remember, October 23, we were there. October 24, the roof caved in, and then the bear is steepening. That is what we keep talking about. So if you thought the end is near and you invested a big amount of your portfolio towards the tail, you may be having some jitters. If, like me, you have a small amount in the tail end of the portfolio, as long as you don't sell it, a couple of percentage points here and there doesn't matter. If you like the coupon and if you can hold it for longer term, you do you, and that is what I do. The big question is, we do see bear steepening happening, which means the bondholders are not happy about the long-term trajectory of the US dollar and the debt level. So what is Chairman Powell going to do? Will Chairman Powell decrease interest rates to stimulate the economy and decrease the debt burden, or will he let rates stay the same? Well, if you look at the bond futures market, there is a very clear guess. It's not an answer, but it's a guess. There is a 90% odds that rates will stay the same next Tuesday, Wednesday. Now, there is a small percentage, I suppose, that Chairman Powell will say, you know what, the economy is too hot. I'm going to slow it down. But that doesn't seem to be taken into account at all. When they did their pre-market briefings, nothing ever said we're going to do something. They just said we're going to be data driven. We're going to take a pause. It's a pause, not a reversal. And so all indications are there is a really small chance that interest rates may further be decreased, but I see no reason it is going to be done next week. It probably will be done later in the year. Having said all of that, the most likely scenario should not be a surprise to the market at all, which is to hold rates flat. So what happens to this bond vigilante if rates stay flat? Let's talk about it. There will be a temporary stutter in the market. Everybody will say, oh my God, even though I was expecting it, I'm still upset that it happened. There may be a little bit of a blip on 29th when the market says, oh, rates are staying the same. Is that going to create a crash? And I would mostly expect that in companies that are growth stocks that have a lot of debt. They may react to it, and I will be waiting with the cash on hand. But this is not a bond vigilante moment. Everybody is expecting short-term rates to stay high, so I don't see long-term rates going up tremendously next week. But I do see a possible growth stock buying opportunity on Wednesday, and I will be ready. Well, what if the Fed surprises everybody and decreases rates? That would be a huge shot in the arm on the stock market. And when I say huge, because it's unexpected, the market will go bonkers. What it also does is it will create the perception or reality that we are going to unsustainably increase inflation, which will then cause further bond steepening. This will create a lot of problems. The bond vigilantes will start dumping long-term bonds, and the stock market will go up. So I don't expect this to happen, but if it does, this would be the most likely result. I personally still have cash on hand, but I don't like to buy when the market is going berserk. And so this will catch me off guard, and I'm hoping it doesn't happen, but who knows? Maybe you do. Let me know. And what about tariffs? The new administration has been talking about tariffs, and I keep telling you about this chill pill I'm taking. I'm getting a brain freeze from all the chill pills I'm taking. So tariffs are expected to shock many equity sectors. In the description of this video, I have posted an article from several months ago, so it is not biased by the election. It is more before the election. And that article talks about, hey, what sectors are likely to see a downside and what sectors are likely to be having an advantage. And the irony is that it talks about how industrials could actually benefit from tariffs. Tech and healthcare could also benefit, and also a positive for pharma, because most of the pharma work is done in our country. Our pharma companies do sell internationally, so there may be some problems if there are retaliatory, tariffs. However, tariffs themselves will not bring the pharma industry to its knees. Tech and healthcare should accelerate. Industrial should accelerate. That is the general consensus. So what does that mean, and where do I go with it? Well, my next 2 weeks, I'm going to keep popping these chill pills. I do expect a blip next Tuesday or Wednesday with interest rates, and so I have a bunch of cash waiting to buy equities if there is a problem in the growth equity market next Wednesday. I do not expect bond vigilantes to crash the long end. If they do crash the long end, and if long-term bond prices go, or not prices, long-term bond yields go above that proverbial 5% mark for the 10-year treasury, I will switch my strategy and go all in on bonds, but I just don't expect it. I do think there is a very interesting sector that is poised to win no matter what. And I will tell you what I mean by that. The dark horse, in my opinion, is the healthcare and pharma sector. Without going into any politics, there is always the chance that the current nominee for the Health and Human Services has a bumpy ride, more delays, maybe doesn't get confirmed. If any of those happen, then the pharma stocks will get a huge jolt. You may remember from the article earlier that if tariffs are levied on February 1st, the pharma side and healthcare side will get a jolt. If interest rates are left alone, healthcare will rise with everything else. In other words, healthcare and pharma specifically appear to be in some kind of a Goldilocks zone where any market disturbance helps and not hurts it. And well, the only exception is a decrease in interest rate, and even that should actually increase every sector, including healthcare and pharma. So My instinct is to buy pharma stocks, and I've been talking about these chill pills, and that's what I mean. I am very interested in the pharma sector, and so I went on a little hunt. This is my year to date, as you can tell. The 22% gain, is happening. I'm selling stocks at gains for the most part, and except last week, I bought a whole bunch. I sold some of my small positions, but I'm holding on to a whole bunch of pharma stocks, and I will tell you what they are. So here is the review of my chill pill holdings. My portfolio went up by almost 50% from 1.8 to 2.6 odd percent last week because I bought a bunch of stocks. I did buy a bond, and it is a contrarian play, but I'm expecting a volatile week. Now, here is the bond that I did buy. It's a Deutsche Bank 6% coupon bond for 10 years. And here is the reason why I bought it. You know, yes, there is a lot of this bear steepening talk. I just don't expect it to go long term. And this bond is a callable bond. And so I'm hoping that, if interest rates drop too much, maybe it'll get called. That's okay. I don't have to hold it for 10 years, but I have no problem holding it for 10 years. The first call date is 2 years out. So the way I see it, this is a 6% CD for 2 years at the minimum. And even if they don't call it, hey, if you pay me 6% pre-tax for 10 years, I will happily take it. That is my logic for buying it. I did not buy a big position, but I did go on the long end of the yield curve against all of the market chatter, because if you pay me enough, I will take it. I eat my dog food. The content on this show is exactly what I do on my portfolio. You can see right here that on healthcare, I am now triple what the quote actual allocation, recommended allocation from Schwab is. I'm also well north on industrials and consumer staples, and all of those are specifically because of what I believe will happen in the next 2 weeks. So let me tell you which specific healthcare stocks I'm holding. Well, three of them have clinical trial results that are due in January. Voyager Therapeutics, RenovoRx, and Veru. Look and see what's happening to all of those three stocks. Very interesting things happening to them. United Therapeutics, I've held it for almost a month now. There is a 1 billion cash flow question that is in litigation that will get answered. I don't know how it is going to go, but UTHR is a good company to begin with. And if they prevail in that lawsuit, their stock will skyrocket, and I'm hoping they do. Natera is one of my absolutely admirable companies. They can detect bodies in the blood that are predictive of diseases, cancer, genetic diseases before a baby is even conceived. Crazy science. I love what they're doing. And then with some of the HHS information that I discussed, politics aside, also because I expect a pharma resurgence, whether or not there are tariffs, I bought a bunch of vaccine stocks. And I'm hoping that those are the right calls. We'll see. And last but not the least, there is a cash flow king, Tenet Healthcare. I bought that as well. These are 10 pharma stocks put together. And so my equities, the newbies, are all health and pharma. Veru is on fire. Voyager Therapeutics, Tenet, and Natera, these are all, they have gained 5% plus just in the last week. And I do have a couple of dogs, RenovoRx is at negative 8%, but Moderna, Pfizer, United Therapeutics, I'm hoping all of these are the right calls. You do you. Let me know what you picked, and I am all ears. And if you disagree with me, I'm counting on you to educate me. I hope you learned a thing or two. Thank you for watching Yield Nerd.